Most people think life insurance is just one thing, and that's exactly why they get it wrong. And if you don't understand the type of policy you're buying, you could be overpaying, underprotected, or setting up your family for some failure down the line that no one even anticipates. So today, we're going to break down 3 most common types of life insurance and exactly what you need to know before you sign on that dotted line. So number 1, we have term life insurance. They call it temporary coverage. It provides protection for a specified period, typically 10, 20, or even sometimes 30 years. Affordability-wise, generally the most cost-effective, at least initially, option, especially for young individuals or those with tight budgets. However, it'll cost you money in the long run. There's no cash value, does not accumulate any cash value over time, and if you outlive the term, the policy expires without any payout. Simplicity-wise, it's straightforward, easy to understand, making a popular choice for the first-time purchasers. Now, here's term life, and from my standpoint, it's like renting an apartment. You have a place to stay for a certain amount of time, but once that lease is up, they're going to come knocking on the door. You walk away with nothing. It's a great short-term protection solution, but not a long-term wealth building strategy. What we like to do whenever we sit down and go through our, let's call it our success process, and we do cash flow analysis, and we look at all the money you could save on a monthly basis, decide how that's going to be put into the policy itself. Within our structure, we always want what we like to say warehousing the term, Mike Vesuvio style, inside the whole life. So over time, when you want to convert it, you have that ability. So let's get into the second type of insurance, which is whole life insurance. Let's call it lifetime coverage. Offers protection for your entire life as long as the premiums continuously are paid. The cash value accumulation, it builds up cash value over time, which you could borrow against or withdraw. You don't need to jump through hoops to be able to do so. The premiums are fixed. They remain the same throughout the life of the policy, providing predictability. Dividends within these whole life policies, you always want to look for non-direct recognition companies. These dividends are never guaranteed, but the right companies would have paid dividends over the last 100, 120, even up to 150 years, which can be used to increase the death benefit or reduce the premiums over time. So when we look at a whole life, it's like owning an investment property, a home. You build equity over time, a business. It becomes an asset. It's more expensive up front, but it offers stability and long-term value that term cannot do. So we get into the cost of the insurance, and you sit down with the right agent, they do a cash flow analysis. They'll be able to show you how to pay for this by, maybe looking at dollars that are going in a direction they shouldn't be going and redirecting them into this strategy over the long term. It's something you should think about. And by the way, at the end of this video, go ahead and click that link below, book a time to speak with one of our superstars here at Epic, and they'll take you through the success process. Nothing is binding. You don't have to say yes, but getting educated is the key. Last, but certainly not least, is the Indexed Universal Life Insurance, IULs. Flexible premiums that allows you to adjust premium payments and death benefits to suit your financial situation. It is tied to an option, which is tied to the S&P 500 typically. There is no cash value, but there is cash accumulation, which is tied to that index, offering potential higher returns. And here's the downside protection. Typically includes a floor to protect against market losses, ensuring cash value doesn't decrease due to market downturns. Now, what's important to understand is they could change the rules in the contract of that policy that you sign up front 20 and 30 years later, unlike a whole life policy. You do have access to borrow money from the cash accumulation, often tax-free, providing liquidity when needed. Here's the biggest challenge, in our opinion, when it comes to IULs over the life of the contract. As time goes on, the cost of insurance increases, and if the rules change within that policy based on what you sign up front 20 or 30 years later, in other words, if there's a cap of 10%, they can reduce that cap to 7, 6, or 5% whenever they want. So just remember, as you get older and you're using the money for other investments, internally that cost of insurance can eat away at a lot of the success that's been created in that policy. So understanding these 3 types of life insurance is crucial to making informed decisions that align with your financial goals. And by the way, you could own all 3 of them separately and differently. Term offers affordability and simplicity for the short-term needs. Whole life provides lifelong coverage with an added benefit of cash value. IULs offer flexibility and the potential for market-linked growth, but require careful management, as I mentioned above. Choose the policy and or all the policies that fits your life, not just your budget, because when it comes to protecting your family's future, clarity, yes, clarity is power. If you're ready to take control of your financial future and ensure your family's security, go ahead, click the link in the description below to schedule a free one-on-one consultation with myself or one of my team members here at Epic Financial Strategies. We're going to help you navigate the complexities of life insurance and tailor a plan that sits, fits, and suits your unique needs. If you're ready to take control of your financial future and ensure your family's security, go ahead and click that link in the description below to schedule a free one-on-one consultation with myself or one of my team members here at Epic. We're going to help you navigate the complexities of life insurance and tailor a plan that sits and fits with your unique needs. Now, don't forget to like this video, share it with those who might benefit, and please subscribe to our channel for more insights on building a secure financial future.